Hi, everyone. Thank you for joining us today. We're just going to wait a few more moments for some folks to sign on. If you can hear us loud and clear, just send us a quick message in Q&A. That'd be great. Thanks. Hi, everyone. Welcome to the TBR Webinar series. Today, Practice Manager Patrick Heffernan, Senior Analyst Elitsa Bakalova, and Analyst Kelly Lesiczka will be discussing, will new management consulting models support digital transformation? Before we get started, we have a few housekeeping notes. At the bottom of your screens, you'll see a series of buttons. From left to right, you can access the slides, audio controls, Q&A, speaker bios, and our survey. After the webinar, you will receive an email with a replay link as well as a link to view and register for other TBR webinars. If you have any questions for us, please submit them via the Q&A widget in On24. You may also reach out to us after the event at webinars@tbri.com. Thank you again for joining us, and here's Patrick to begin the webinar.
Thank you very much, and I just want to say this is a bit of a celebration as we get towards the end of the year. The management consulting benchmark that we publish semi-annually is the broadest and the deepest of the products that we do here at TBR, and so that requires an enormous amount of work. So it's kind of fitting that we end the year finally with the addition of the management consulting benchmark and a chance to share some of the findings on this webinar. So you're going to hear from Elitsa and from Kelly and myself. We'll take a poll about midway through, and we'll leave plenty of time for questions at the end. So with that, I'll go ahead and turn it over right now to Elitsa and let her walk through some of the biggest trends that we saw this time in management consulting. Elitsa?
Thank you, Patrick. Hello, everyone. The management consulting market is very dynamic, and we see a lot of new trends that emerge as we track and analyze vendors' strategies and performance. We see an intensifying competition amongst the vendors that we track in the benchmark. There are 13 vendors in the benchmark that we cover. So, we're going to cover most of them and their numbers here during this webinar. So as vendors strive to deliver business outcomes through transformation, they evolve their portfolios, they evolve their resources, and they try to be more attractive to clients. To sustain the growth and to expand client reach, they've changed what they offer, and they've done it successfully during this year, and we see that from the results. But they're still disruptors that vendors need to take into consideration before they move on to the next year. And we've identified 3 disruptors in our benchmark that we just published. So the first disruptor is that transformational deals are now becoming smaller in size, they're becoming shorter in duration, and clients want results fast. They want them now. We're seeing a need for changes in the sales model on the vendor side, changes in the delivery model in terms of the ways services are provided, the way vendors interact and collaborate with clients and with partners so that they can succeed. The second disruptor is the macroeconomic environment. It's becoming uncertain. There were indications during the second half of this year that there's softness in the market, which could negatively affect discretionary spending, and a slowdown in management consulting revenue could follow because of tighter budgets. The third disruptor is that nearly every consulting engagement now includes a technology component. This leads to an increasing convergence of the consulting service technology. So vendors can offer technology expertise and can offer it beyond strategy into implementation and managed services. They need to be able to integrate those this go-to-market approach and provide it to clients. So keeping in mind the disruptors, let's move to the next slide and see the aggregate performance for the vendors in the benchmark. As we analyze management consulting vendors, we keep track of multiple metrics that go back several years. And you can see this graph goes back to 2014, so we can track the trends. Management consulting revenue is a key metric in the benchmark. It's a metric that we further split into service lines, into geographies and industries, and helps us understand the competitive positioning and also augments our analysis of the key trends in management consulting. While management consulting revenue growth accelerated from 2015 through 2018, it was on a good growth trajectory. We expect revenue in 2019 to slightly decelerate to 8% for the full year in 2019. The combination of high competition among vendors, some softness related to the macroeconomic uncertainty, and some vendors shifting their business mix in favor of managed services is combined will lead to this slight deceleration in revenue performance. However, the 8% growth in management consulting in 2019 will continue to surpass overall IT services revenue growth, and we track IT services growth in a separate benchmark, which is all-encompassing. And when we look at the IT services vendors' performance, they would grow in the low single digits in 2019. So it's a comparing to IT services overall, so 8% is quite a good growth. We're seeing vendors across the board investing in initiatives to expand their portfolios and resources to be able to deliver transformation that involves emerging technology solutions and requires a lot of the vendors to have more than just strategy and advisory capabilities. And Patrick will walk you through the portfolio side of our story on the next slide.
So actually, before we go to the next slide, we're going to take a quick poll, looking at asking you all which of the benchmarked consultancies grew the fastest in the first half of 2019. So while you're thinking that over, two cautions, or one caution and one prediction. So the caution is that we're talking about the management consulting revenues of these firms, not the total firm, because some of them on there have much larger practices outside of management consulting. And then the other thing I just want to touch on real quick while you're filling this out, Elitsa mentioned macroeconomic pressures. If we published last week a predictions document that was broader than management consulting, it was all of IT services and digital transformation. And in that document, we talked about the the importance of the macroeconomic pressures that we're starting to see and what that could do to, well, what that's already doing for some of the management consultancies and the IT services vendors as they plan for 2020. So with that, we'll get the poll results later, but we're going to take a look at some of the changes in the management consultancies portfolios and the set of offerings that, and we've talked about this before, the ways that emerging technologies have permeated management consulting, and every vendor now has a blockchain practice, RPA capabilities, and at least a view on the future business implications of quantum consulting, if not a quantum consulting practice. I think what's critical is how these technology components are now part of they're part of the consultancies themselves, part of their strategic plans for growth, including increasingly the reasons behind specific acquisitions. They even influence the way that the consultancies partner with cloud and software vendors. And so in the most mature cases, we're seeing where an emerging tech capability spawns new intellectual property for the consultancy, which the consultancy then turns into a managed service or a subscription-based offering. And so when you put all that together from TBR's research and analysis perspective, it gets much more difficult to delineate between strategy and technology consulting. From the consultancy's perspective, that distinction matters a lot less, it matters less to them than the need to figure out how to staff and manage their own capabilities, their own talent in a world where strategy consulting and technology consulting are blurred, and it also puts pressure on their ability to manage their clients. And then, of course, from the client's perspective, who cares? They simply expect that any and every consulting engagement includes an element of technology and technology consulting, which is great for those vendors who have fully embraced the emerging technologies and found the right way to manage their technology consulting capabilities and have convinced their clients that they, the consultancy, actually know what they're doing. So when you put all of that together, even the complete permeation of technology across every aspect of consulting, it comes back to the basics. It's all about managing people and having permission from clients. It's where we sort of started with consulting way back in the day, and that's where we still are with consulting now. So with that, we can move on to the next slide. And I think Elitsa will take us through the first part of this. Elitsa?
Yes, thank you, Patrick. So on this slide, I just want to summarize the three main trends that we see in terms of portfolio changes. Patrick touched on them as well, and provide you with some vendor examples. So the first trend is managed services. While management consulting remains a core business for the vendors in the benchmark, we're seeing an increasing tendency across the vendors to develop and expand their managed services offerings to provide holistic transformational solutions that cover the advise, build, and run lifecycle. So vendors rely on their established relationships with the C-suite to drive transformational conversations. However, they're investing in technology-enabled frameworks to ensure consistency and repeatability. And some vendor examples. EY is positioning managed services as a value creator. The company uses its tax expertise to engage CFO buyers looking to outsource their tax-related functions, including financial crime, tax, finance, and compliance. Bearing Point is another company that comes to mind. It launched recently a business services unit to provide IT-driven managed services beyond software as a service, and to improve its ability to attract clients with more holistic solutions that include consulting, software, and services. The second trend is IP. So solutions-led, strategy-led, and Big Four vendors, this is how we group the 13 vendors in the benchmark. They expand their IP-based offerings, which intensifies competition for IT transformation contracts. For example, Accenture uses proprietary IP such as ZBX to industrialize strategy consulting service delivery and to accelerate the pivot toward asset-based consulting services. Another example is Bearing Point, which integrates consulting with IP assets, such as LogEC, which is a logistics emission calculator, and LogCost, which is a solution for transport cost planning and accounting. And this helps Bearing Point attract clients that want to address supply chain challenges, again, integrating IP assets with consulting. The third trend is design consulting. So this has been a trend that we've observed specifically over the past year when vendors have started investing in niche digital and creative design areas to generate advisory services opportunities with the C-suite executives and enable business transformation as well as improve customer experience. A good example of a vendor is Accenture. Capgemini is also a similar example, but specifically for Accenture, it has made a lot of acquisitions in the past year to strengthen Accenture Interactive and to expand its value proposition in areas such as creative and visual design consulting, which are necessary if Accenture wants to appeal to new buyers such as the CMO. If you want to move to the next slide, just to give a few more examples of the consultancy. So management consultancies are diverse. They have their own portfolios and ways to differentiate and compete. Here on this slide, I've selected one company from each vendor group in the management consulting benchmark to highlight their portfolio expansion strategies. There's a common theme for the three vendors that we see on this slide, and this theme is technology. So PwC is using acquisitions to gain Salesforce expertise and talent and to grow technology consulting practice. McKinsey, which is a strategy-led vendor, it's a traditional strategy consulting firm. It's increasingly embedding technology into engagements to expand beyond its true strategy consulting business. And the company is using ventures like McKinsey Design, digital labs, digital capability centers, and experience studios to drive success. And Accenture is embracing blockchain. Accenture is adding advisory, implementation, and managed services for blockchain so that it can kind of leapfrog competitors and gain an advantage in an emerging market. So I want to pause here and see if Patrick would like to add a comment on this slide as well.
I would actually. I think it's important. I mean, we recognize that it's always been true that these vendors have taken different approaches in order to stand out, and I think it's really important the way that Elitsa framed it with technology as being that sort of common thread line. I think we're also seeing change in the way that consultancies see their partnerships with cloud and software vendors in particular. Agnosticism, which was, everyone talked about being vendor agnostic, it has declined. I mean, there's no question about it in the conversations that we have with the consultancies themselves and certainly with their clients. And it's really more about becoming best in class with a specific set of technology vendors. That really is the preferred approach. And I fully understand that consultancies are always going to work with who the clients want them to work with, but it's now much more rare to have the consultants outright profess to having no preference at all within the technology stack. And I think it's important to understand the way that these Elitsa used three examples of these vendors. We could have used probably any three or we could have used a vendor from any one of the three groups to sort of illustrate what is going on here. Again, the diversity isn't new. The differentiation, the attempted differentiation isn't new. I think what is new is what Elitsa brought up in this idea of partnering being different now. So we'll continue now. I think, Elitsa, you're back, right? Or is it going to Kelly now? Sorry, we're not going to go to Kelly. Go ahead, Kelly.
Thank you, Patrick. So on this slide, we wanted to talk about how vendors or management consultancies are changing the way that they hire talent and develop for new portfolios. So as we had discussed a little bit, vendors have been shifting their portfolios to incorporate new technologies, including the IP assets, as well as other emerging technologies. And in doing that, they also have to adapt their delivery resources to be able to deliver and fulfill engagements tied to these capabilities. Where demand has been increasingly high for talent resources, the vendors need to shift from their traditional hiring methods in order to actually onboard people to support these new areas. Where consultancies were traditionally pursuing MBA-educated hires with preferred schools, it's no longer really enough for some vendors to support in areas where they want to grow. As we've talked about a little bit, and we will going forward, technology is becoming a larger piece of every transformation engagement. So without developing the people to support the technology aspect now, the vendors are going to have trouble capturing and fulfilling engagements. One way that they have been augmenting their delivery resources is through IP-based assets, which Elitsa talked about a little bit, or a bit, and the IP-based assets are providing expanded scale for vendors, as well as enabling them to differentiate a little bit more. Management consultancies are also looking to recruit technology-oriented talent in addition to the hire. So they're still going through traditional methods, but they're just incorporating new ways of hiring. So they're looking to add on data scientists, designers, and architects, digital designers and digital architects. Talent is not really readily available, so vendors are also using reskilling programs as and leveraging their existing talent to support or to shift into new skills. To increase their ability to compete on a strategy level, they're incorporating more technology expertise, so permissions and expertise around the C-suite, digital design, and analytics, which has not traditionally been a piece of the management consulting profile. McKinsey, for example, they continue to recruit experienced hires around industry expertise, as well as data scientists to complement their new portfolio areas, including analytics, design, and emerging technology. EY has also kept retraining and ongoing education as a core piece of their resource management strategy, especially as they're evolving to provide transformation engagements from the strategy all the way through the business transformation pieces. They typically use their EY badges program, which is helping them to make better use of their existing talent, as well as helping to improve retention. Some of the more common badges that they have been, or the talent has been earning, has been around data utilization and analytics, digital and design, as well as cybersecurity. IBM is also reskilling employees using internal training programs and apprenticeships, as well as it's augmenting its future workforce with new collar jobs through vocational training. Pursuing the new methods of hiring technology-verse talent, as well as integrating acquisitions which bring talent as well as the technology pieces, will provide vendors with the increased scale and resources that they need to consult on and deliver the areas, as well as integrate appropriately integrate technology components within their current engagements. While the deal size is shrinking, vendors' portfolio around emerging offerings are helping to address demand, as well as better combat competitive and macroeconomic pressures to continue to capture engagements. Moving on to the next slide.
Just before we do, I just want to throw out there that we've spent time this year with PwC and KPMG as well, talking about the way they are trying to diversify the skill sets of the people they've already hired, the way that they're trying to add digital skills to their current workforce, and I think it feels like everybody has some kind of version or some kind of app or some kind of approach on this. I don't think anybody's come up with the best answer. We're actually going to touch on this a little bit later on in the webinar, but it's important to know that we're aware of all the different things that are happening out there. There's not been anything that's just sort of blown away the competition and sort of solved this particular problem. So, okay, sorry, on to the next slide.
So moving on to the next one. In the graph, you can see the management consulting vendors and management consulting headcount and their associated growth. Overall, all of the vendors had experienced headcount growth as they're looking to build scale and increase their talent, technology talent benches.
Firms that have not really invested in or fostered career development are facing more challenges in staffing their centers, as well as supporting ongoing innovation around new portfolio areas. The vendors that have incorporated established a more innovative and progressive culture are having more success with retaining their employees, as well as moving into these new areas. The culture and focus on creating clear career paths, as well as to support their partners' professional development and to move along the career tracks is that's helping BCG attract a lot of employees and to firstly recruit them and keep them on board and address some of the challenges from their strategy-led vendors. It's a similar thing for Bain. Bain has changed their adjusted their selection process to better segment potential talent, which is helping them predict who would be a better fit for a company and help to keep their attrition lower. They've also implemented a new training program where they're having existing Bain employees train their new employees to help infuse the culture within the onboarding process and give them the tools and the resources that they will need to succeed. A focus on talent has been a key enabler for vendors, as talent is helping them to develop portfolio and delivery resources. Using talent is also helping them to staff their co-innovation centers. A lot of them have been building out their co-innovation centers tied to particular technologies. I know PwC has opened a cybersecurity one. BCG has been opening centers tied to their subsidiaries, so a few centers particular for Platinian and BCG Gamma, and they need to hire people to support them. So in focusing on infusing these technologies early on is helping them to shift as they open these new centers. They're able to repurpose employees and put them to support and help show clients the meaning of the centers. Traditionally, consultancies have relied on the generalist employees becoming specialized over time, but now they're using more training programs to help move into other areas, not just along the particular path. While some firms are still leveraging that model, a lot of them are looking into different ways to provide more extensive training around emerging capabilities and as well as increasing their consulting-oriented staff. So McKinsey, which traditionally hired within, they're now looking to external resources to help include additional technology and data scientist staff. Deloitte is also using its seven global Deloitte University locations to help train and reskill their employees to not only invest in their existing employees, but also to ensure consistency in their service delivery. PwC has also been focusing on upskilling efforts to build its talent versed around digital. PwC, which I found was a bit, which is helping PwC, which I haven't seen from some of the other vendors, is actually focusing on training for its leadership to address the challenges of diverse and rapidly changing consulting teams. As the vendors are incorporating more technology staff, the culture is also going to need to be addressed as it's two different business models. So taking the time to reevaluate and adapt resource management and how to train and develop talent is something that vendors will need to look at.
And Kelly has brought up two of my favorite topics, and if you've heard some of our webinars in the past couple of years, you know that when it comes around to talent, particularly at the different innovation, immersion, experience, whatever you want to call them, centers, the way that that talent is managed, the way that that talent is groomed, the way that that talent is then used, is dispersed throughout the rest of the consultancy, makes an enormous difference in terms of getting the value back on the investment in those often pretty expensive places to build and staff up. I can go off on a long rant about the importance of talent around that, around recruiting and retaining, but suffice to say it's a critical part. The other one is leadership, and we'll talk about this a little bit later too. But the firms that are investing in leadership, both at those immersion centers or innovation centers, and the firms that have recognized, as Kelly pointed out, the importance of not only hiring the right people, but training around leadership in a digital era, or training around the implications for leadership of having your talent more digitally versed is critically important. And I don't think everyone has sort of come on board with what a difference that makes. So on to the next slide, we have been hammering away now at the point about talent, and honestly, there's not been a ton of change here, except for that this topic comes up in every discussion that we have with the consultancies and with their clients. And as I mentioned before, no one thinks they have the best approach. We're frequently asked, what are others doing, and is it working for them? Everyone wants that diverse talent. Not everyone is prepared, as I said, to manage and to lead this. And I think, from my perspective, what's going to become the separation between the truly elite and fastest growing firms in this space and the rest is going to be leadership at that middle management level, how they handle disruption, and honestly the very stark contrast between where they are, or what their jobs are like now, and what those jobs were like when they started their careers. One sort of small nugget on this, outside of the management consulting world, but I think it's really telling. I was recently with let's call them a Nordic telecom vendor, who they talked at length about skilling up their own talent around digital. So they weren't emphasizing new hires, and they weren't talking about diversifying the talent pool and trying to find a more diverse talent pool out there. Instead, they were investing very heavily in training the people that were already skilled at some aspects of the telecom business on how to be and to act and to think and to do everything digital. So this approach to me makes a ton of sense, given the number of those amazing, wonderfully super talented data wizards out there is definitively small. So being able to find people that you've already recruited for all the other right reasons and upskill them in the sort of in the new, in the digital, in the ways that everyone expects work to happen now, I think that is probably the long-term a smarter play. Elitsa, some thoughts on this particular point as well? I hope Elitsa's still there. We didn't lose you, did we?
Yes, I'm here. You were breaking up a little bit, so I was on mute. Leadership is really important, and the changes that happen recently, especially at the CEO level for some of the vendors. The new CEOs coming in and keeping key leaders from acquisitions as well to bring continuity in the strategy and to bring succession without any interruption, I think, is the real important piece of the equation as well. For vendors like Accenture that we have in the benchmark, for Capgemini, which also has a new CEO will have as of January. So keeping the talent, keeping the leadership trained and up to speed, and leadership buy-in into the strategy of the company and continuation of the plans is something that's very important, in my opinion.
Thank you, Elitsa. And we did do a special report, actually, on some of the leadership changes across the broader IT services space back in the fall, so you can certainly find that on our website. So now let's take a look at the results of the poll, and let's see. All right, so this is really encouraging, because what it shows me is that the folks who are attending this webinar have actually read the management consulting benchmark that we put out, because as we go to the always talked about bubble chart here, you can see that 34% were right. It actually is BCG that led in terms of revenue growth in the first half of this year. And I think if you read our profile on BCG, you can see why. A lot of the investments that firm made a couple of years ago, and a decision on their part to stick with a strategy that seemed to be working, I think has really kind of paid off. We often talk within TBR about sort of what strategies work best, and doing what you do well is sort of core. The other thing is not not doing what we joke about. I don't know if anyone from Infosys is on this webinar. We joke sometimes about Infosys 4.0 or 5.0 or 6.0 because Infosys consistently for a while was changing their strategy every year to 6 months. BCG did the opposite. They made some smart investments and they stuck with their approach to consulting, and in particular the way that they brought in digital capabilities, the way that they brought in emerging tech. I want to, and you can see from the comments on this, and you can see from the bubble chart where we see everybody right now. And again, that's management consulting revenues. That's not firm-wide revenues for someone like Accenture or IBM or Capgemini, or even Deloitte and the others. I do want to call out. We'll maybe go around, but I'm going to call out PwC myself, because if you look in the management consulting profile that we did on PwC that was just released this week, I think it was Monday, you can see how we expect that firm is going to start growing faster in the next year and really into the medium term. Similar to what I just said about BCG, some of the investments that they've made around capabilities, around internal automation, around what Kelly was talking about with respect to training folks at all levels around digital, a commitment to their approach to the broader topic of digital transformation, I think, and to people, I think, is going to accelerate their growth. And as Elitsa mentioned at the very beginning of this, as a whole, we see a bit of a deceleration across the management consulting market, or across the benchmarked vendors, I should say. So if we see the benchmark vendors as a whole decelerating, I think we will start to see more separation as we go into 2020 between those that have sort of figured out the right approach and have begun to implement that fully, and those who are still trying to really make the right decisions or trying to find which decisions they can live with in the near term. Elitsa, any comments on this in this bubble chart before we jump to questions?
Yeah, I wanted to call out IBM here specifically because it's a company that has developed throughout the years, and it's the second in terms of growth that we expect for 2019. So IBM, specifically in management consulting, accelerated from 5% growth in 2016 to 11% in 2018, and we expect over 12% in 2019. So there's been a progression. And I think it's a good example of a company that, even though it's not performing too well overall, IBM services, the management consulting component is doing really well because the company has invested in expanding capabilities around and positioning as a vendor that provides digital reinventions to clients by integrating consulting, integrating asset-powered solutions, something that IBM is really strong about, design consulting, prototyping expertise, and last but not least, the industry expertise. So all this combined has helped the company evolve and grow well in management consulting, essentially utilizing the sweet spot around delivering technology-enabled transformation, and to expand in service lines in management consulting, such as operations consulting and organization and change consulting, which would be the main service categories within management consulting. I think the one last thing that I want to add here overall in the benchmark is that technology consulting is one of the service lines, and actually it's the service line that's been performing and growing the fastest, even though it's the smallest in size.
Yeah, and I think that's, I don't know, Elitsa, I don't know if you broke up there, but I think that is a really important point. And it gets back to how we delineate between the service lines and the challenges that will continue to be. And again, if you've tuned into this webinar over the last couple of years, you know that we've been struggling with this for quite some time. Kelly, some comments on EY while folks are looking at the bubble chart.
Yeah, sure. So EY, they've been on more of a deceleration, not dramatically, just slightly decelerating in terms of management consulting revenue. But something that's been different for them over the past year or so is that they've created a greater emphasis on their partner network. They've expanded their technology partnerships, such as with SAP and Microsoft to co-develop solutions, which is helping them to generate new advisory-led solutions, as well as also generate the migration and management, creating opportunities within their disruptive technologies. Beyond technology partners or the most well-known technology partners, they're also partnering with smaller vendors to try to create more niche areas of their portfolio, so to develop more particular sections within cybersecurity, as well as to bring their services to areas that they haven't had as strong of a presence in the past.
Right. Yeah. No, I think, one thing we all should do when we're talking about management consulting in this benchmark and these vendor here is always take that giant step back and realize that some of these vendors were not even in the management consulting space 6-7 years ago. So the growth has been really incredible. So the questions are starting to pour in, so we're going to go through a few of them now and hopefully get to all of them before we run out of time. And because Elitsa is in Bulgaria, which some of you may have figured out, and Kelly and I are sitting here, we will probably tackle them first and then hand off to her as we can. So the first question is, with the design consulting acquisitions and build-outs in the traditional consultancies, how are turnover rates looking? Are the creative design skills, quote, sticking around? So that's two questions, and there's going to be two different answers. So we haven't seen a dramatic change in turnover rates when you look at the consultancies as a whole. So if you take, all of the consulting practice of any one of these firms, the turnover has not been higher or lower in a significant way than it's been in the past. That hasn't changed. Are the creative and design skills sticking around? In my opinion, no. We see a lot more hopping around of that design and creative skills. We see more people willing to do a short stint here and another short stint there and bounce around. The people that have been hired that have that kind of creative and design skills that they brought to a particular firm. I don't know, honestly, I don't know if that is because of the nature of the job or the war for talent or the job market or the nature of the jobs themselves or the nature of the people that are drawn to, that have that creative gene, unlike most of us, that can do that kind of work. So the answer to the turnover rates is it hasn't changed dramatically, but if you narrow it way down and look at specifically, if you look at creative and design skills, anecdotally, we see a lot more jumping around there. Elitsa, have you any anecdotal thoughts on that or anything else on that from your side?
So, hello?
Yes, we got you, Elitsa.
Yes. Yeah, I'm back. Overall, I haven't seen such fluctuations in the attrition rates, in management consulting altogether. We see companies that have acquired digital skills like Accenture being ranked among the top consultancies with lowest attrition rates. So it brings me, to believe that they are trying to get those cultures together, to get the new cultures with the traditional cultures to work together. They are adding, it's a transition, it's a cultural shift. Some of the vendors are making special locations like Capgemini, for example, adding Fahrenheit 212 resources to work together with consultants and moving them in together so that they can start transitioning and mixing the cultures. It's a challenge. It's something that we highlight as a disruptor for the vendors, and certainly the ones that do succeed will do best. But it's not a secret that some vendors experience challenges and people leaving due to the fact that there is a cultural clash.
Yeah, and for a lot of these firms, the culture itself is one of the things that attracts people and keeps people there. So that is, again, it gets back to a leadership challenge. Another question that came in said, can you comment on the role that alliances and partnerships between firms may have an impact upon consulting models? So we've not seen a lot of partnerships between the consultancies themselves. I think what we see a lot of is where clients want to bring in different consultancies for different parts of their transformation or different parts of their, I'm going to say the word journey because I had to, they bring them in for, and I think the best example of this is around change management. I think we have talked to countless clients who have are going through a particular digital transformation or going through a particular large-scale implementation or a large-scale engagement, and they bring in somebody else for the change management part of it. And honestly, I'm not sure why that is, given that oftentimes the vendors who are the consultancies who are there at the beginning have those change management capabilities. But I've not seen a true. We see it with the IT services and IT services vendors at the broader level. We do see some partnership and some working there, but I haven't seen it really at this management consulting level. Elitsa, some thoughts on that?
Yeah. Yes. So Bearing Point is a very good example of a company that works extensively with alliance partners, because Bearing Point is a European-based company, and most of its clients are headquartered in Europe, but they have offices, and they have expanded in other continents like like North America or Asia Pacific. So in order to serve Europe-based clients with global reach, Bearing Point has started partnering with technology or consulting companies within each specific geography, so that it has the resources and the capabilities to provide services to its European client base if they need services outside of Europe. West Monroe is one company that they consistently work with in North America. Beam Consulting is in Asia Pacific. So if Bearing Point doesn't have resources in North America, it reaches out and uses and partners with West Monroe to deliver the services if they are needed within North America geography, for example.
Excellent, Elitsa, and you answered one of my questions that we always have, which is around which vendors do we include in this benchmark and why. So I think talking about Bearing Point in that way is a really good way to explain how there are certain vendors that we pay close attention to because of our own analysis of what's happening in the market and where there's going to be an impact down the road. So another question that's come in: overall, the glow around digital/design capabilities touted as differentiators over the last 5 years seems to be fading. Now it's just business as usual, agree or not. So I mentioned the predictions document that we released last week. We sort of buried the lead there a little bit because the last one of our predictions was that digital is going to disappear, that people are, as a term, not as an actual thing. But I think in the coming year, someone's going to make a big splashing announcement that they're no longer using, and maybe it's already happened internally and we haven't seen it yet, but they're going to stop using the word digital and stop talking about business as differentiated between digital and non-digital. What is analog anymore in the world anyway? So I think that's, I don't think it's a wild prediction to say that's going to happen, but I think what is sort of underlying that question is, was there a lot of hype around this as a way to differentiate, and has that hype sort of faded as all the different management consultancies have essentially a lot of the same capabilities? I think one of the easiest ways to see how true that is if you look at McKinsey. They have a new, relatively new, it's not an offering, I think it's McKinsey Leap, I think it's called, or the Leap. But it's essentially a lot of what many of the big four firms have been doing around design thinking, around digital, around bringing diverse teams together, doing it in a very agile way, setting up these sort of locations that are unique and different and not what the companies have been known for. So that McKinsey is there with everybody else, I think sort of, helps everyone understand that that's sort of just the way that business is being done now. I don't think that's any anything new, anything surprising. Another question is, will a potential economic softening force any consolidation in the management consulting market? We play with this question a lot. We play with this question when the economy is great, and we play with it when we think that there may be a global economic correction or a kind of slowdown. Again, something we talk about in the predictions document. I guess I'm saying you should definitely go read it. Is it going to force a consolidation? You know, I don't think so. I think the most likely outcome from a global economic slowdown, two likely outcomes. One, we're going to see some really aggressive acquisition activity by some of the management consultancies who are going to recognize that it's the right time to buy. And I don't mean buy each other or, you know, consolidate in that way. I mean more around buying up those acquisitions that they maybe thought about but put on hold. Again, and this gets back to what we were talking about before, acquisitions centered around technology, acquisitions centered around capabilities specific to a technology vendor. So, you know, Salesforce acquisitions or you know, teams of consultants that are Salesforce certified or Microsoft Cloud, Azure, or whatever it might be. I think we're going to see a lot more of that activity, and it's going to be the management consultancies that are the most aggressive about going out and buying, with the expectation that, you know, they'll be getting in at a good price and buying that talent and having the time during an economic slowdown to actually enmesh that talent in with the rest of the firm, so that when the economy begins to turn around and pick up, they'll have those capabilities not only ready to go, but fully part of the firm as a whole. So I think that's going to happen. I think the other thing that's going to happen is we're going to see an emphasis on the ecosystem in a different way, where you'll have, call it a consortium maybe, of vendors that come around to each other and go to the market as a way of providing end-to-end, a phrase that I hate almost as much as I hate the word journey. But no one is end-to-end, and so I think what we'll see is something like a McKinsey, DXC, Infosys, or, you know, some sort of or even better, like McKinsey, Infosys, you know, Nokia or something, some kind of ecosystem play that tries to capture everything that's happening with digital transformation in a way that allows the vendors to partner differently, go to market differently, even sell differently. And that will be because the vendors are no longer going to be able to squeeze as much out of their clients based on the fact that the clients aren't going to be spending as much. I think it's a really important idea that whether a economic slowdown happens in 2020 or 2021 or 2022, I mean, a correction's got to happen at some point. I think a lot of enterprises are going to be slowing down their spending in the coming years, and I think the vendors that are best equipped to both acquire and to partner better to handle that slowdown, I think those are the ones to keep an eye on. And obviously, we have opinions about who those are, and maybe we'll share them the next time we do a webinar. And I should probably know when the next webinar is, but honestly, I don't. So that wraps up the questions that we got. And we'll keep the line open for another minute or two. And I'm sorry, Elitsa, did you want to weigh in on the economic slowdown part of it at all?
So I think you covered most of the points around the economic slowdown. There are pockets that have been developing. Some vendors called out financial services in North America and in the UK as areas where they started seeing softening, especially now towards the end of the year, some budgets being tighter and decisions being slower. It hasn't been a big shift on an effect on the performance in terms of revenue growth, but they're cautioning it going forward and making sure that they are aware. Brexit is another thing that's going on. It's been going on for a while now. So they are alert about the changes and what's going to happen. Yes, it will bring more acquisitions maybe to the front. So I think geographic expansion is another way of looking at on the acquisition side. So if vendors who don't have reach in North America would be looking to get more presence there, Capgemini is a very good example over the past year. I won't be surprised if smaller vendors move in that way. Bearing Point comes to mind. It doesn't have a big reach in North America, so that could be a potential, making a smaller move in there for its size. And then startups. Startups are the other area that we've seen expansion in terms of collaboration, more collaboration between startups and management consultancies and clients working together to develop solutions. And I think there will be more interest from the management consultancies to acquire startups, to get the intellectual property, to get industry experts in the mix, to get niche capabilities into their portfolios through acquisitions.
Excellent. And we have one more question in. And before we take it, I do want to mention, Sarah helped me realize that on January 22nd, we're actually doing a webinar, what is it, Death of Digital?
The End of Digital.
The End of Digital. So all of the thoughts that I was sharing a little bit ago about the way that digital is going to be gone is actually going to be the subject of an entire webinar in the first, in January, just in about a month. So we'll send out invitations, make sure you see that. So the last question that's come in is, how much did you press on differentiation? Grafting UX design and research with business industry consulting now sounds like a well-worn path. I fully agree that there is nothing new with respect to attaching UX, CX, attaching design thinking to business, a business lens, or even even talking about industry specialization or industry expertise. I don't think that's new, but I think there's two important things in my mind about that. One, it's still what clients actually want. They still say that again and again when we ask them what are their priorities when it comes to what they want from their vendors, and we try and steer it away from kind of, what are the specific things you want them to do, like lower their prices or whatever, and more towards what are they not doing now that you want more of. It often comes around to industry expertise. It often comes around to being able to talk to them about what's going to happen in the future. So the other part of that is that the expectations around what's going to be delivered still come back to having that capability around user experience, around emerging technology, and pairing it with solving business problems and doing that through the confines and the rules and restrictions, or the rules and constraints within a particular industry. So I think from that perspective, it's a well-worn path, but it's because it's still what the clients want. And I think another important aspect of that is, that I guess if that's true and that's not going to change, what's really important is that the consultancies themselves continue to speak to the problems that clients face in the language of the clients themselves. So to explain what I mean there, the frustration that we do here is that, especially with this whole permeation of emerging technologies, which we've talked about for a couple of years now, especially with everybody getting all hyped up around whether it's blockchain or quantum or RPA or whatever, artificial intelligence. The hype and the excitement around that tends to drive conversations in a way that clients are not necessarily crazy about. They want to hear what's new and they want to know what's new, but they still want to talk about their own problems in the language of their own business. And so it is a well-worn path of doing exactly what I was saying before, but the temptation is there to talk about the technology before talking about the business. And we've had countless examples where an IT services vendor in particular, they're particularly bad at this, but consultancies as well, who have presented to us and said, here's how we talk to our clients, here's what we're doing for our clients, we're helping them solve business problems, and then the very next words they say are all about the technology. So while it may be a really well-worn path to mold that mold design and mold technology around business and industry-specific consulting, I think it's really important that business part of it, solving the business problem, still remains at the core and what's at the very, very front of what people talk about when they're talking to their clients about the opportunities around management consulting, around consulting, around the change that can come about. So that sort of wraps it all up for us. That was a great question there at the end too, because I like, as you can tell, I kind of get fired up and passionate about this stuff because it's fascinating to us. And this research comes out twice a year. The large benchmark itself, as I mentioned an hour ago, this is the broadest and the deepest product that we produce at TBR. It takes an enormous amount of work. I'm very grateful to Kelly and Elitsa for what they do in putting it together. And if you have any questions, please reach out to us directly. And if you have any problems accessing this or any of the research, please let me know. Sarah, any closing comments?
Yep, if you have a few moments, it'd be greatly appreciated if you could please fill out the survey on your screen. A replay version of the webcast will be available after the event and will be sent out to you via email. To view a list of our upcoming and past webinars, please visit tbri.com. Be sure to join us on Wednesday, January 8th for A Decade In, Cloud's Real Work Begins. Thank you, everyone. Hope you have a great holiday season, and we'll see you in 2020.